Before we get started, just please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Alright, so let us get straight into it. Let's have a look at what's been happening this week. As of course, last week we had a fantastic week of volatility, ending with non-farm payrolls. We had the BOJ doing crazy things. Pretty much the market moved all over the place, which is kind of what we like as traders. It usually can set up opportunities for us. We'll have a look at the charts in a moment and see what happened, what's happening, and where we are right now. In terms of non-farm payrolls, essentially all the numbers hit the mark, except the actual job number missed it by a little bit, but basically it gave back the US dollar a little bit of strength. So we would have seen our Aussie dollar, the GBP, and a couple fall off against the US dollar after early solid movements throughout the week. All right, this particular week coming up now is fairly light on data. As you can see, look, we have, I guess, unemployment claims here, and Miss Yellen's testimony. He's probably the biggest moving for the market, and that happens right towards the end. There's no data, significant data, due out today and tomorrow, so it's going to be a little bit slower. With all of the major numbers coming out towards the end of the week, we can see retail sales. I guess purely because of the data, it's a US data week basically. So all the US pairs are the ones that are going to be more significantly reacting towards that. It's just going to come down to a matter of which one reacts more or less. So for this week, in terms of which pair is going to be the most data driven, it could be any. I'm going to say the Aussie USD, okay? And I'm really saying this because last week in the monetary policy announcements for the Australian dollar, they pretty much signaled that that easing was not an option, which basically means they're not really interested in decreasing the value of the dollar. And that kind of changes the mentality because we've been talking about interest rate reduction in Australia to assist the China situation and the exporting and so forth. Pretty much the monetary policy has come out and said that that it's not an option, so they're going to persevere, and that's what it essentially caused our Aussie dollar to increase last week throughout the first half of the week, and then of course non-farm payrolls brought it right back down. So I think at the moment the Aussie dollar is a little bit fragile. A lot of people don't know which direction to go on it. So because of so much US data this week, I think this is the one that's going to move the most, purely based on data. All right, so that's all I really have for you on the fundamentals. There's not much happening this week in terms of, like I said, news announcements. So please make a note of these times. They are in my local times. That's Australian Eastern Standard Daylight Savings Time, or otherwise known as Sydney time. Let's bring on our charts. Let's see what we've got, what we've triggered, what has not happened, and how we can move forward. Alright, so let's start off with the Aussie dollar. Now, I've just been drawing on my charts a little bit. Just let me just delete a few things. Give me 1 second. Okay, last week when we zoomed out, I drew this line on my chart. Well, I extended it and I said I was very interested in this point over here. Now, as it turns out, if we zoom in, the market went right up to that line. Remember, we always talk about that sometimes support can turn into resistance once broken through. And this is exactly what's happened over here in the past. You know, this was a supportive level. The market came down and we kept on shooting through. Once we broke through and the market returned to this level, it seems to have now turned into some type of resistance. Now, I was just drawing a few lines on my chart. Let me just try and place them again. I'm just trying to fit some things in. I'm trying to find some interesting areas. And as I zoomed out, I also noticed that this line here was catching these points, and you had this also supportive line up there. So this, in essence, this becomes like a spot of what we might call confluence or double supportive, or sorry, double resistive regions. So the fact that the market shot down, yes, I know it was based on data, but most of the heavy movements in the market are based off data anyway. So if we're a technical trader, we must not get hung up with that as a reasoning of why things are occurring, because it's going to bother you mentally. But it was definitely we. What I'm trying to say is this, guys. By the use of resistance lines and pattern trading, we were able to predict an area that there was a good probability that the market might reject off. Okay, that's all I'm trying to say. And essentially what happened was exactly that. Now, we've been trading price action, so for our method, we didn't actually get the opportunity to enter the trade. What I would have liked to happen is for this candle to be like a little inside candle like that, and then take a trade off the next one in this direction. It didn't happen. Just question to the room, did anybody trade this purely based off that line? Can I just get a show of hands if anybody traded that purely based off that? Got 1, 2, 3 no's. It just gives me an idea for your appetite for risk. That's all. Okay. All right. So unfortunately, we didn't get an opportunity to take that either. So what can we see in this chart now? Give me a moment, guys. There was something that I was seeing. What I'm trying to do is I'm trying to see what lines I might be able to draw that will actually fit the charts quite well. So I'm interested to see if there is an area over here where I might be able to take an opportunity and trade in that direction. All right, so that's all I'm purely looking for. I'm trying to make this line fit, as you can see, which would give me an area there. However, this point here seems a little bit significant, so what I like to do is I like to zoom out into different time zones, and when I see here, when I've gone out to a daily, I can see that this clearly doesn't look right to me. So to me, this line would look a little bit better somewhere in this vicinity as such. Okay, so now when I go back to my 4-hour chart, let's see what that looks like. And it looks, who likes that line? Can I just get a show of hands? Who thinks this one looks kind of alright? I might jiggle it a little bit about there somewhere. Or I could try and squeeze that in like this. Can I just get a show of hands? What are we thinking here? Okay, I've got a little bit more of you are saying yes. Okay, so then if we like this line as an example, and we already know that we have an upper boundary based off our daily chart, we've got this upper line, this one here, oops, that line there and this one down here off a 4-hour chart, we can kind of try and give ourselves some type of a trading range. So, it's not even, we don't even have a candle set up here. So that's not an inside candle. It's not an engulfing candle either. It's really nothing. So, well, it's a bit of a waste of time. I was I was hoping that I could have got a trade up that way. All right, let's get rid of that one. No go. All right, based off that chart, what can we look for? What would we like to see happening? Are we in uptrend or downtrend? There's our moving averages right there crossing over. Are we up or down? We seem to be in uptrend. Okay, so that would mean what might happen then if we're in uptrend, this tomorrow at the moment this candle here is lower than that one. All right, so what that would mean is if this candle say finishes like this tomorrow, we would have a fractal over here and we would have the opportunity of an inside bar to trade upward. All right, so does everybody understand that candle pattern that I've just drawn on my chart right now? So on the assumption, and which is correct, that we're on an uptrend, if the current candle, this one here where my little pencil mark is right now, as long as it does not break lower than this candle and closes somewhere there like I've drawn it, it would give us a fractal here tomorrow, and then we have the opportunity to trade the break upwards. And the reason for the trade would be that we've basically picked up an inside candle in an upward trend. So write this one down and let's look for it tomorrow. So for tomorrow, Aussie dollar, just 9 o'clock when the market opens, just check, when the new candle starts, and let's check for an inside candle. It's the best thing that I have available. There's nothing else showing on this particular chart. Okay, let's move on. Euro USD. All right, Euro USD. Let me just zoom out there a little bit. Okay, instantly I want to try and join these up. Our channel that I was tracking has now finished with this big candle that broke upwards. Did anybody trade this? Can I get a show of hands? Did anybody trade that? No, no. Okay, I actually spoke about this one on Thursday's class. Remember when we talked about psychology? And I said that this was a clear signal if that's the type of trader that you are. Okay, I didn't trade it, but I'm just basically just pointed it out, and I just want to see if anybody else did. So since we didn't, it was a legitimate trade. Let's get rid of the channels. They're gone now. And based on what I am right now, I may have an opportunity to trade short tomorrow. If this candle here, the current candle, if as long as it does not go lower or higher than that one and it stays inside, okay, so let's say it stays like that, tomorrow I'm going to get a fractal there and I'll have an opportunity to trade the break down. Now, the Aussie dollar one that we just looked at, all right, is essentially we're looking for the possibility of going long. And this Euro USD, we're looking for the possibility of going short. Now, in essence, these two currencies kind of correlate, they probably correlate about 65%, 70-ish percent. So you're thinking, well, why go long and short at the same time? Well, the fact is none of the two trades have triggered yet, so I can't go long or short, but I'm just open to the idea of both trades. And sometimes if I do trigger both, a long and a short, I don't actually mind because I'm a little bit hedged and I'm just going to take the trade anyway. Does everybody understand what I'm talking about when I talk about correlations? I might have to do a class on correlations. I haven't done one for a long, long time. So maybe this Thursday we might do something on correlations and correlation trading. All right, it's a little bit more advanced, but a lot of you guys have been with me for a long time, so we'll see how we go. All right, so the reason also that I'm looking for a short trade, sorry, the most obvious reason is, what's the most obvious reason why I'm looking for this short trade? Because in theory, my moving averages have crossed and I'm in an uptrend. Why am I looking for a short trade? What's my number one reason? That's it. Thank you, Richard. I offer resistance line. I'm going to try and trade off this resistance line. Okay? Yep. All right. So that's, let's see. Let me have a quick look at a 4-hour chart just to see what it's looking like. Nope, nothing there. Okay, so this one looks pretty good, but I just get the feeling that this may go too low and it won't be set up tomorrow, but you never know. All right, so let's put that in your calendar, in your pencil, in your notepad, whatever, sorry, and let's have a look at it tomorrow. Let's move on. Let's have a look at the GBP USD. Okay, GBP USD. Last week we placed a pending order of this is actually a really good example. Let me just remember what we did. We were selling, we were trying to sell, and we were trying to get in on the trade a little bit aggressive off an engulfing candle. So let me count the candles back. So Friday, Thursday, Wednesday, Tuesday, Monday. Aha, here we go. It was these two candles right here, where the red candle was engulfing the green candle. And at the time when we placed the trade, this current candle was somewhere over here. I remember it was somewhere, let's say it's somewhere there. This fractal was not there, and that candle had no fractals. And I said, remember, if the current candle, which was that one, went down and finished down here somewhere, that we would have a fractal over there tomorrow. And I said, if you're an aggressive trader, then you've got the opportunity to trade it right now because we're in a downtrend, pulling back and selling into the downtrend. Does everybody remember that? Does everybody understand what I'm talking about? Okay, great. Thank you. All right, so what we did was we were a little bit conservative and we said, let's split the trade into two halves. So we'll put 50% of our risk and we'll try and get in with a pending order. And we tried to get in with a pending order somewhere around about here. And our stop was over there or somewhere there. And then we said, and then tomorrow when we wake up, if the order's still valid, we'll put in the second half of our trade. What happened was when I woke up, the trade went up, got me, well, it was over here, went up, got me in the trade and stopped me out. So obviously I didn't place the second half of the trade. So that's what happened. I just wanted to explain. The trade was legitimate. So what can we look for right now? Are we still in a downtrend or not? Downtrend or uptrend? D for down or a U for up? What do we think? Okay, that's interesting. I've got two people that say up, but most of us are saying down. Okay, by our definition, I still think we're in a downtrend and we're having a bit of a pullback. And what we can actually test is, let's test what Fibonacci level that is. So give me 1 second, let me just test it. It's come back from this point to here. It's come back to the 50% level. All right. If I took a wider stance on it, so let's zoom out a little bit further. No, that's fair enough. That's drawn correctly. I don't want to use a different one. All right, so that's at the 50 level. I still think our moving averages have not crossed back over. I can see there, so we're still going to stay with this. Is this 3 candle pattern a reversal pattern? Yes or no? What do we think? Is it a reversal pattern or not? Most of you are saying yes. Okay, this is. Let me give you some numbers. There's about 26 people in the room right now. Only one person has said no, and everybody else, so about 13 people have said yes. It kind of is a reversal pattern. I would have liked this candle here to have no bottom wick, so the actual proper reversal pattern looks like this. Let me draw it for you so that we can all just remember. You might have your, can you guys see that? Let me change color. I'll use a blue color for my green candle. Okay. All right. So you got your blue candle. All right, which is going up. Then the next candle can be either color, but what I'd like it to look like is something like that. And then this candle, I want it to cross and close beyond the halfway pattern of that blue one. So that entire 3 candle sequence would signal as soon as this candle starts to sell. All right, and this would be like a hanging man or a shooting star type setup. All right, does this 3 candle pattern look sufficiently close enough for us to trade it? You say, if you guys want me to trade it, I'll trade it. So okay, I need a vote now. Shall we take the trade? Yes or no? All right, it's unanimous. Well, let's do it. So for the newer people in the room, the explanation for this trade is that we are in a downtrend. Okay, we can see that we're in a downtrend, and what we're going to attempt to do is we're trading a retracement within the trend. So meaning we're coming down, we're pulling back, and we're hoping that the trend continues to go downwards. This 3 candle pattern has occurred at a very, very sweet spot, and that is our signal. All right, so someone's asking, there's no support. This trade is not based off a support level or a resistance level or anything like that, but let's see if I can find something. Give me 1 second, because I think I just saw something. If it makes someone feel better, let's have a look. Let me get rid of this line up here. And I can actually extend this on even further back. Who likes to trade a little bit more now? All right, so someone suggested, shall I have a bit of a look? You can see that this level we've bounced off this level a few times. It's been resistive, and now we're coming up to it, and hopefully it's been supportive, and now hopefully it can be resistive, and we can do our thing. All right, so let's do it. Shall we put the full risk? We're actually getting a better entry. We would have entered here. We're a little bit better off. So let me just measure up. Just give me 1 second, guys. Let me just measure this trade up. Okay, I'm going to take a $60 risk. $60 risk over 175 pips, which basically means I've got to trade at about 35 cents a pip. That's US dollars, so I'm going to take a trade. I'll take it at 03. I'll be slightly over this number. Okay, so here we go. Right. Oh, wait, let me check the account I'm in. Yep, I'm in the right account. 0.02. Stop 146.77. And I'll just put any target. I'll adjust it in one moment. 144. And I'm going in at market. That's it. Let me adjust my target now. 170. Make it about here. 142. Any questions? So what I've done is I've sold at market. There is my stop up there. There is my target. And my 1-to-1 point is over there somewhere. I'll make sure that I take action at my 1-to-1 point. Alright, so those of you who are following me, you'll be in this trade already automatically. Alright, let's move on and let's have a look at gold. Okay, I was trying to track a channel. This is a good example of how price actions can protect us. If you were simply trading here because we're at the edge of the channel, you would have got stopped out. Okay, but you can see that there was no price entry setups anywhere around there. So this is one of the advantages of doing this, that it can protect you from entries into the trade. So let me get rid of that. Let me zoom out a little bit and let's see if there's anything happening. I've already crossed through that line as well, so I'm just checking. So that was no good. Okay, I don't really see anything on this one. I'm just going to a 4-hour chart. Okay, this week gold, I can't really see anything. I just need it to settle down, and let's just see if we can make a double top or something in this area over here. But it's not enough for me to try and take a trade off that. All right, I just need a little bit of confirmation just to see if there's a level of support or resistance or something. So gold, let's just walk away from it this week. Let's move on. Let's have a look at US yen. Okay, here we go, US yen. So US yen moved significantly last week. It moved about, nearly 500 pips, and US yen generally doesn't move so much. So it was a very, very volatile week for it. Did anybody take this trade? At the time, did anybody take this particular trade as an inside candle? It was close, because if you were looking at the indicators, when this candle started here, the moving averages were in fact crossed over. You can just see it indicating we are now in an uptrend. I saw it, I looked at it, and I thought, oh, will I put my pending order to sell? But then I didn't do it because my rule basically said my moving averages were wrong now. So, and then anyway, it turned out to come down, but that's not a problem. That's why I'm just asking if anybody else saw it. It was a good example where the moving averages were pointing the other direction, and it was borderline. You could have guessed and you could have not. So if you do, in this situation, my rules pretty much say that they've got to be lined up correctly, otherwise I won't take it. So therefore I did not take it. All right, so someone said yes, they took it by accident. Well, not a problem. In the end, it did come down, so it was quite good. What do we have now? Let's see. Has that left us? I don't have anything for you guys on this one. Does anybody see something that I don't see? Type it in, let me know. But the only thing that I can see is kind of like this messy bit here, but that's if this candle looks like he's going to break that one up there, so we're not going to get a setup anyway. So I don't really have anything for you on the US yen today. Okay, but always try and draw your lines, try and join something up, and let's just see if anything happens, but it's just not happening right now. Let's move on. Euro yen. Okay, did we trade this? Thursday, Friday, Thursday, Wednesday, Tuesday. Who took this trade? Is anybody short right now? I don't know why I have not got this trade. Anybody? Okay, yes, I've got two people short on it. Okay, well done. I don't know why I haven't got it on. Let me just zoom out a little bit just so I can see. Okay, so we've been tracking this channel. We tried to trade it over here and I got stopped out. And then so it looks like on Tuesday, we had inside candles there. And it looks to me like this candle did not break the top. So you would have had an entry there and you would be in a position where 116, you've virtually hit your 1-to-1 point already, and the trade's still live. Okay, so for us right now, the channel, remember a channel overrides trend type trading. So if the channel's going down, even though our moving averages here are going up, all right, which would signal that we're in an uptrend, the channel is running down, so we can't trade against it. All right, so because in theory I should be in a trade right now there, but I'm not. That just means that there's no other trades going right now. Okay, for those of you who are short, just write it out. Well, you're in the channel, and let's see if it moves across to the other side for us. That's what we're looking for. All right. So euro yen currently would be a position short. Let's have a look at the Kiwi dollar. Kiwi dollar. Okay, we have a situation where previous support looks like it could be resistance now. And we have a situation where That looks to me like what's that, guys? An engulfing candle, yes. This is the same situation that we had last week with the GBP, which means, what does it mean? So at the moment, there is no fractal over there. All right. Um, if we want to wait for the fractal, we have to wait for this candle to finish. The options are that it could finish down here. All right. And then you start your trade tomorrow over there. Or if you're aggressive, you take the trade straight away, but the candle could finish up here and you get a worse entry. The worst case scenario, which was what happened to us last week, is the candle ends up being a big one like this and there is no fractal at all, and then you're in the trade for the wrong reason. All right. So based on our experience of what we did last week, what do we feel about this one? I'm going to ask a question. First of all, if you feel like we should trade it, let's figure out how we're going to trade it in a moment. But first of all, do we want to trade it, T for trading it, or N for no trading it? What do we feel? Okay, I've got 6 yeses, 2 nos, 3 nos. Some of you want to wait for the fractal. Okay, so wanting to wait, that's still good. That means you want to trade it. All right, so the majority of us wants to trade it. So then I've got two options. I've got 3 options. Ready for the options? Option number 1, I could split the risk like I did last time. Okay, I could say let's put a pending order there for 50% of the risk. Okay, and then tomorrow I can put in the other 50% of the risk if it's still valid. We did that last week and we got stopped out and we lost 50% on the trade. Okay, that's option number 1. Option number 2, we put 100% of the risk right now. Option number 3, we wait for tomorrow. 1, 2, or 3? What do we do? 1, 2, or 3? I'm just going to go by whatever most of us say. Okay. All right, I'll give you the numbers. I've got 1, 2, 3, 2, 3, 4, 5, 6, 7, 9 people said 1. 9 of you said that. 3 of you said this. So that's 9 and 3. 1 person said this. Anybody else want to? There's a few of you that are saying nothing. All right, so let's put in 50% of the risk, right? So this is we said we're going to go with the majority. So what we'll do is I'm going to pick a level. Let me just measure this candle. I just want to see what it's 117. Okay, let's pick a level around about 30 pips better off where we are right now. Say there. Okay, so we'll enter 50% of the risk right there where I drew that mark. So let me measure it. And we'll give it a 90 point stop. So 90. So that means I'm going to have to trade at $30 divided by 90. 30. We'll go 0.02. We'll trade in at 0.02. Okay. The entries 66, 67. Sell limit. 66, 67. My stop is 67, 56. 67.56. My target is going to be about 64, and I'll just move it with my arrow to get it right. It's a sell limit, place it. Okay, obviously that target looks a little bit far. Probably about there. Let me just move it up. Does everybody understand what I've just done? So we're not in the market as yet, but we've placed a pending order to sell 0.02, which is going to be approximately $30 worth of risk at 66.67. And my stop, there's the entry. The stop is up there. Target is down here. So what we hope happens is that at some point this candle gets us in, but doesn't continue to that level. Okay. All right. Let's have a look at the final one for today. Euro Aussie. Let me zoom out. Have a bit of a look. Okay, you can see what I'm trying to do. I'm trying to fit my lines in, make them work. Did anybody take that trade? That would have been in an uptrend type trade. Did anybody see that one? No? Alright, that one's already gone, so we've missed it. So we've got an opportunity, well, we're right in the middle of this shape, so it's not the cleanest, not the best shape, but I do like the top line that we've caught all this area here, and we've caught area there. So over here, that to me looks like is going to be a hot spot, so there could be an opportunity for a big resistance point there. Alright, so I like the top line. The bottom line, I like the top line better than the bottom one, but if it does come to this area here, I'm more interested to see if it breaks through it. For some reason, I just like this top line better. I don't know why, I just do. All right, but so what we're going to do with this one is we'll monitor it. We're right in the middle, so we can't do nothing right now in any case. So let's see what happens as we approach these areas, and let's see if we can get an opportunity to take a trade out of that. Okay, so if you have any questions, please type them in right now. If you want me to have a look at something, let me know. Let me go back and summarize what we've done today. All right, so Aussie dollar, we could have an opportunity for a buy signal tomorrow. All right, so we need to see and wait if that candle turns out to be an inside candle, so we might get the opportunity to go long for tomorrow. All right, Euro USD, we've got the exact opposite. We need to wait for this candle to finish, and we might have an inside candle to go short based off this resistance line that we've drawn in our charts. GBP USD, we've jumped the gun and we've entered off a 3 candle sequence setup right there, and we are sellers right now. We've gone in at our full position, and let me just get the numbers. What do we do? We entered at 145.14. Stop is 146.77. Our target is 142.06. That's our 2-to-1 target, or thereabouts. And of course, don't forget your 1-to-1 point. Gold, we said we're leaving it alone this week. US yen likewise. Euro yen, For some reason, I don't know why, but we should have been in a trade. We're not. Some of you are. So we're not doing anything until that trade plays out. Kiwi dollar, we are going to try and trade off this resistance line. And we have placed a 50% of our trade as a pending order at that level there. So what will happen is if tomorrow, for example, if tomorrow when we wake up, or after 9 o'clock, sorry, for those of you who wake up before 9 o'clock, if this candle looks something like that, what you'll find is that we'll be in a trade already for half of our risk, and then at that moment you can enter the other half of your risk and with the same stop loss. Okay, so just remember that. So in other words, that second half of the trade may be a bit bigger than the first because the stop distance is much smaller if it ended up like that. Let me give you the numbers. I've got a pending order to sell Kiwi dollar 0.02 at 66.67. Stop at 67.56. Our target 64.79. Last but not least, Euro Aussie. We've just spotted a couple of strong resistance and support lines. So let's see how it plays out and if it gives us an opportunity to squeeze a trade in between these two lines or as a trade breaking beyond them. Any final questions for today? No? We're all good? Alright, as always, if you have any questions, please email me. Send me your picture, make it easy for me, and we'll have a look. I'll have a look through some of the things we'll cover this Thursday. I'll try and get something together for you, perhaps on correlation. So, which is it's actually quite a good trading method, definitely a method for risk management as well. Okay, I'll see you all on Thursday at 3:30. Have a great week, and bye for now.